I think the long-term trend on the dollar is not good. I mean, Bitcoin lives outside of their world. They can't control it, and that's not what they want.
Welcome back to the Black Swan Capitalists. My name is Vandell. Verson here with us, and today we have a special guest joining us. That's Lawrence Lepard. He's actually a managing partner at EMA, and he's a sound money advocate. He's been involved in the precious metals and gold space for a long time and is gradually migrating to the digital asset cryptocurrency Bitcoin space. And thank you for joining us, Lawrence. Really excited.
Yeah, happy to be with you guys. I like what you've been doing and followed you for a while, so happy to
Appreciate it.
spend some time with you.
Yeah, likewise. So, we had some things we wanted to bring up, some topics, and the first one we
Go for it.
wanted to start with is actually the US dollar.
Yeah.
So you already know what's going on
Yeah.
with the US dollar. It's really it's constantly losing its purchasing power. And I think this is scaring
Correct.
people all around the world, nations and investors. What are your thoughts on that? What do you think is
Yeah, I
going
completely
to happen?
agree. And it's not just, I mean, I know, Brent at at Santiago Capital, and it's not just the dollar against all the other currencies. The crosses that I watch the dollar against Bitcoin, I watch the dollar against gold, I watch the dollar against silver because it's lost 97% of its value since 1971 when we went off the gold standard. And that last 3%, we're working on that. And it's obviously it's not a straight line. You get bounces and so forth. We had an enormous bounce on the 2020 events where gold took a real rip, and so did Bitcoin. And then Powell decided to get restrictive, shove up interest rates, and pretend he was Paul Volcker, which he really can't be. And of course, gold backed off a bit, not much, and Bitcoin backed off a lot. Bitcoin backed off, it was partly because of the tightening, but also in the Bitcoin case, it was because FTX blew up. And so you had, that whole, a lot of the hot money in crypto went away as a result of the FTX failure. So, but yeah, the dollar, I think the long-term trend on the dollar is not good. And there are lots of touch points to support that. We're confiscating the Russian reserves. You can see the BRICS and other countries are doing more bilateral trade without using the dollar. I mean, the dollar used to be 90% of all the transactions in the world, and that's fallen. I think the number is closer to 65% today, and slipping rapidly. And it really comes back to the reason for all of this. The fundamental reason you guys know, and I say it 24/7 on my Twitter feed, is the U.S. federal government's out of control. They just can't stop spending and printing money. And the U.S. debt balance at 34 trillion, and I guess you guys probably saw it. It was all over the news the other day. It went up $1 trillion in 100 days, right? So it's increasing at $3 trillion a year at rate, and probably that's going to accelerate. We're running a deficit. Theoretically, we've got a healthy economy. The stock market's doing okay, and unemployment's not very high, and yet we're still running a $2 trillion deficit, the kind of deficit we ran back in 2008. So it's the U.S. government is out of control, and that has severe implications for the dollar. It's like a family that just spends too much. Eventually, they're going to go bankrupt. So
Yeah. No, I agree with you, and you made a very good point. In regards to that, I think as we see more adoption with the cryptocurrency space and blockchain technology, I think that's going to be one of the main drivers that's going to bring all this new money into this digital landscape with
I think
crypto,
that's right.
blockchain. I think more people, even your average Joe, including investors, institutionals, investors as well, are realizing that, okay, this money has to go somewhere else, and it has to go somewhere that's going to be around in the future and preserve that value. And I think that's, in my opinion, I think it's crypto, digital assets, and gold and silver. I think that's one of the clear winners as a hedge against inflation and to actually um, survive in this economic environment.
I would agree with you. I mean, it's clear to me that digital assets are the future. They're easier to hold, transfer, etc. In Bitcoin's case, the algorithm is very certainly known. There's no risk of monetary debasement because we know exactly what the issuance schedule is going to be. The rest of the crypto is maybe not quite that good, but there are cases for the rest of the crypto. I'm not necessarily strongly opposed to it, but I'm very much a Bitcoin guy and a Bitcoin maximalist because I know and understand the monetary policy. And gold and silver are money that can't be printed. I mean, I've always said gold and silver are analog sound money. They were the only form of sound money until Bitcoin came along, and now Bitcoin is available, and so to me it's digital sound money, and guess what? We live in a digital world. I mean, look at Saylor says, look at how the Apple iPhone has absorbed a ton of digital things. I mean, it's you've got all your music on there, you got all your photos on there, you got your social media on there, you can call people. I mean, all of it. It's the world is a lot different as a result of what's happened digitally. So to me, it's harder for some older people to accept it, but younger people instantly get it, that we now live in a digital world.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Yeah.
Yes.
Absolutely. I was going to bring up something regarding Bitcoin. Did you want to go over, Swan, or should I?
Yeah, real quick, I did want to add some flavor
Sure.
to we were talking about the dollar, and
Yeah.
it's those who are truly informed and understand the mechanism of how money works. They understand that the dollar is facing so many different challenges and just pressures, despite the fact that I think Jerome Powell and Janet Yellen, they are really putting efforts out there to conceal the problems and even project the illusion of financial stability. That's something we can talk about in a sec. But many countries are continuously reducing their holdings in US Treasuries, and they're opting to buy gold instead. And I find that very interesting because the central banks are saying one thing, but they're doing something else. Not to mention that the US is losing $3 trillion annually now on its balance sheets. And aren't we paying like $2 billion now a day in interest on the debt, something like that? But
I don't
it's
know
just
the daily. I know the annual run rate is 1 trillion, so it's got to be billions on a daily basis. But it's $1 trillion a year roughly, and growing. Yeah, it's crazy.
right.
I mean,
So it's so unsustainable. But my question is about the dollar. Are they trying to really conceal this to prevent a panic?
I think so. I mean, obviously the people who run the government system, their job is to stay in office and to keep things from falling apart. That informs us that, when things do start to fall apart, they will print to keep it together, as they always have in the past. And, they have two mandates that are spoken on, low unemployment and price stability. They've kind of failed on the price stability, although they're maybe trying to get it back under control now. But the third unspoken mandate is a functioning financial system. And one thing we know, having observed them now for 30 plus years, is that whenever the financial system begins to not function correctly, they come in with the fire trucks and the hoses to, spread liquidity around. And they did it in 2008, they did it in 2019, they did it in 2020, they did it in March of 2023 when Silicon Valley Bank failed, right? I mean, if you'd followed the law, that would have led to a failure of that bank and the depositors taking a haircut, because that's what the Dodd-Frank law said. And yet they broke the law or overrode the law and said, no, we're going to create this BTFP, and we're going to allow these banks to place their bad paper with us, and it's effectively money printing.
Right.
And so we know where they're going to go, right? This is what they will do.
It's
when the next crisis erupts, and it appears to me that the next crisis might be on the cusp of erupting, and it's in this commercial real estate area, right? You've got all these buildings.
It's a bubble.
It's a bubble, right? Well, and even if it wasn't a bubble, it's just the world has changed. People used to go to the office and work in a commercial real estate building, and that's less of that takes place because of what we're doing right now. People can work at home, they can work on a Zoom call, and you don't necessarily need to be in the office. So we've overbuilt our office space, and you can see it. I see all these data points of buildings being sold for 70% below, with the last price, of only a few years ago. So somebody, and those were buildings that were built using leverage. So some bank held that note. When that building gets sold, that bank's note goes to money heaven. and 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 there's going to be more of that as time goes by. In fact, the rumor is right now that and I have friends in DC, and apparently DC is kind of like a sieve. Everybody talks and you brag about what you know, and kind of, so there are no real complete secrets in DC. And these friends have told me that they think that there's work in DC about some kind of a resolution trust like commercial real estate bailout facility of Fannie Mae, Freddie Mae. It would make sense, right? I mean, if you're going to have a bunch of banks fail because commercial real estate's bad, you create a facility, you say to the banks, hey, you got a bad commercial real estate loan, fine, put it with us. We'll work the building out, and hopefully they say they're gonna make a profit in the long run. Of course they won't. But and we'll fill that hole in your balance sheet so that you don't go bankrupt. And
this is a massive opportunity for them to consolidate further, though.
Well, that too. Yeah. The other thing they'll do is we'll shove you over to Jamie Dimon, and we'll give him a sweetheart deal for doing that, because he doesn't want to buy your crummy bank unless we give him incredible terms, and so on and so forth. So so it's pretty certain in my mind that they will have a problem in this area, and then it's also pretty certain in my mind that they will create a facility because they can't have half the banks in the country fail. They just and that's when Silicon Valley was going down. That was obviously the fear, right? And that's
they even have certain institutions labeled as SIFI. Systematic, importantly, financial institutions.
The government systematically important banks. Yeah,
but those
are big enough, and those aren't really the ones that are at risk. I mean, some of those are too, but they can go borrow at the Fed window, and they're pretty sophisticated. And I don't think they're going to let a GSIB go down. But the problem they've got is they've got all these regional banks, and I don't know. Barry Sternlicht said he thinks there's about $1.2 trillion of losses in commercial real estate land, maybe bigger. So 1.2 trillion is a big number. And, if you look at all those regional banks, and that's going to hit their balance sheets, you're going to have more bank failures. I'm
with you 100%. As we were talking, before we started recording, I think, we're going to see more of that this year. We saw it in 2023. And what's interesting is the Fed bank bailout program actually ends March 11th.
Yeah, I was kind of surprised to see them do that. I thought they would definitely extend it. They must have something else in their plans, and
a bail-in maybe.
It ends in March for kind of accepting, I think, new loans into the program. I'm not sure they made it. It was fuzzy. I'm not sure that they really are going to require the people who've taken loans to repay them and totally unwind it. My guess is that's going to get kicked down the road. And my guess is that some of those banks who've taken loans, they can't repay them. They needed them, and they're stuck. So it's going to be interesting to see this, but I think there will be more problems in this. It's like, stay tuned, because I believe there are more problems coming in this category.
Yeah, and the worst part is that this is also a presidential cycle. So they're going to really have to see how they're going to play this out.
Well, historically,
that's exactly right.
I'm sorry, go ahead.
No, I was just going to say that. I thought it was very interesting that when the debt ceiling issues came up last time, as you recall, they kicked the debt ceiling to January of 2025. So basically, they don't want to deal with any of this spending shit during the election.
It's true.
Biden, he's just got his foot on the accelerator. They're just gonna, they're gonna do whatever it takes to try and keep the economy healthy and try and get reelected.
Yeah, absolutely.
Deficits be damned, right? We're not going to worry about deficits. That's for the future.
They have a record of that too,
Of course they do. Yeah,
a very compelling track record. And it's funny because if you look at the historical data, it shows even in election years that, the market tends to sell off around April and May-ish. So what I'm anticipating is we have a correction, and then the official bull market really starts after this last correction. I think that, but we'll see.
Very possibly. I can't really say with respect to the stock market. It's a very tough beast to handicap. But I do think that the Fed is trying to figure out a way to declare that they've declared victory on inflation. Whether they really have it or not, I think is a question mark. I don't think they do, but I do believe kind of the consensus that they will probably be cutting rates by mid this year because they'll have some economic slowdown and I think they've just done the math and they realize that, if rates are high, that leads to huge, there's a debt spiral with high rates. They can't not have, debt growth and negative real interest rates. They have to have negative real interest rates or the whole thing implodes.
Yeah.
So,
you're right. And you probably know this, but since 2009, after the 2008 housing crisis, all governments and economies reset interest rates to near zero. And we're coming around the 4-year cycle time. Coincidentally, the Bitcoin halving is around the same time when the government will need to refinance its debt. So I could see them actually, like you said, lowering interest rates in the very near future this year. For their own best interests, not just the economy.
Yeah, I mean, they're selling a lot of short-term notes to finance the deficits, and when the short-term notes are at 5%, that's a big number.
Yeah.
And the $1 trillion of interest expense, by the way, that they're spending right now, that's on an average cost of the debt of about 3%, 3.1%.
It's insane.
So if they were to ultimately grow, if they keep rolling debt and they keep rolling from long into short, and short stays at 5, the interest expense is going to go to 1.5 trillion. And they're already running a $2 trillion deficit where we are. Tax revenues I think are only about 4 trillion. So, they're really, the government's finances are really, really a mess, and they're really upside down. And, the only way that they would, that this could change is they could increase taxes or they could decrease spending. But if you really look carefully and you read, there's just no will whatsoever to do that. And so my sense is that they will continue to drive us forward into a crisis. And at some point, the crisis will be substantial.
I think the crisis, sorry, Lawrence, the crisis would get big enough to where the central banks can't handle it. And I think that's when the IMF will step in. If I may share my thoughts on something with you, and this is going to take a minute, Vandell, so I just really want to explain. I draw a lot of my discussions from what I see happening on another level at the central banks. I look at what they are doing, not what they're saying. So first of all, I really think there's a surge in central banks' gold purchases worldwide. And I think this is connected to several factors. Yes, several factors. Now, one of them is the regulatory changes in Basel III regulations from the Bank of International Settlements. So that's one. And those regulations, I've read these things thoroughly alongside my brother. They require banks to have an adequate reserve of gold to cover their liabilities. Those liabilities have not even been addressed yet. The IMF also, along with central banks, have publicly said that they are seeking a counterpart to gold in a form of a digital asset. This is where we now shift into crypto. One indicator of this trend, however, is the emphasis on establishing a cross-border settlement mechanism where all currencies have a way in and a way out. And that is outlined in Basel III regulations. Again, I've covered this at length with my brother, and this is, again, solving the cross-border transactions. And I think that's the big play here. And it seems that gold plays a crucial role in facilitating those settlements because of the universal recognizing of gold, of its value and stability. I'm going to end this real soon, guys. I'm so sorry, but it's such a big piece we have to look at. There have been statements as well from the International Monetary Fund director, Kristalina Georgieva, and she keeps underscoring the importance of gold-backed digital assets. And I'm going to share a quote with you, which was shared to me by Andy Schechtman himself. And he's a dear friend of mine. We speak commonly. Now, he said that she said if we are going to have digital money, it must be gold backed. Otherwise, it's just another repackaged fiat currency. So again,
Correct.
drawing connections between these statements from institutions. So if it's okay, I speculate now that central banks are exploring digital assets that are targeting the cross-border problems and liquidity provision, which would align well with the requirements, again, outlined by Basel III and the broader goals of central banks in adopting to a digital economy. So this is the question I have. What are your thoughts on the digital asset XRP and what Ripple's doing in general? Because based on our research, that's kind of where it narrowed down to. And I just find that to be very interesting. Again, this last part is the speculation. So I just want to know what your thoughts are.
Well, my view is, I mean, I'm not familiar with the woman you spoke about at the Bank of International Settlements, and I think it's interesting that she would mention that a crypto be backed by gold, because that's obviously, I'd be in favor of something like that. But I think that, like, the other thing that's been talked about is, just generally speaking, there's been a lot of talk amongst, particularly the ECB, about central bank digital currencies, right? And so they don't like, I mean, Bitcoin lives outside of their world. They can't control it. They can't issue it. They can't, it's permissionless, and it's decentralized, and that's not what they want. They want to have all the control. They want to have the permission. They want to have it centralized. And so it strikes me that they're going to try and push to go in that direction. And with respect to XRP and some of the other coins, I mean, it's entirely possible that those are solutions that the powers that be will push for. I mean, I think that the thing we all have to recognize is that the powers that be have a very strong vested interest, and by that I mean the central banks and the BIS. They have a very strong vested interest in protecting their fiat system.
Yes.
Although having said that, some of the central banks are smart enough to hedge their bet with gold, right?
That's true.
Right. And so you see, central bank gold purchases have gone up very steadily in the last 5 years. It's been a really good time. In fact, this year, if you look at the ETF flows in the United States and the Western world into gold, they've actually gone down. People have been, those ETFs are shrinking, and yet the gold price is hanging in there right around 20,000, 2000 or 2050, 2100.
Interestingly.
Interestingly, right? And I think the reason for that is that the central banks are taking up the slack, because if you kind of look at the big picture, what we talked about earlier, we're pretty sure that the monetary system is a mess and it's broken. And anyone who studies history realizes that eventually we're going to have a day of reckoning, I guess is the best way to put it.
It's inevitable.
And I think that the central banks are thinking to themselves, they can see it too. They're not stupid. And they're thinking, all right, well, when that day of reckoning comes, I think the people who have the gold are going to be better positioned than those people who don't have the gold.
Yeah.
And so, even though we've been, quote unquote, off of a gold standard for some time now,
yeah,
when the monetary, system starts to stress and break, people will run back to the something that's, been money for 5,000 years and that can't be printed. So, so I think that, it's all good. I mean, it's all, you can see what's going on, and there are competing solutions. I mean, gold's one solution, Bitcoin's another solution. They each have different characteristics. I tend to think the central banks, I ultimately think the right solution longer term for the world is Bitcoin, but set that aside for a moment. It's not as developed, as widely understood or known, and not as many people hold it. And my guess is that when this crisis that I can see occurring at some point starts to unfold, the central banks will very naturally gravitate towards, well, okay, we got to go back on a gold standard. I don't think
yes, no doubt.
I don't think they're
Gold
going to make
standard is coming.
Yeah, I don't think they're going to make the intellectual leap and say, well, let's just skip gold and go to Bitcoin. I mean, that's what they should.
I see your point. I see your point.
What I was going to say is, so central banks have been accumulating, gold at record highs since 2010,
right?
With over 7,800 tons accumulated in that time, and they're still
that's just reported.
That's reported.
That's just reported. Yeah, I mean,
exactly.
There's a lot of data, Switzerland is the world's largest refiner of gold, and they put out data on how much they're shipping into where. And China is only showing a couple thousand tons of gold on their official statements. But if you look at the gold that's been sent to China in the last 15 or 20 years, I mean, it's 10 or 15,000 tons. It's multiples of what they report. So I mean, and of course you can understand why they would do that. I mean, if they were trying to buy more of something, they're not going to tell the whole world, "Hey, we're buying a ton of this shit, so you can come compete with us." They
Yeah.
want to buy as much of it as they can cheaply.
They're
And
exactly. But Lawrence, I had a question. So you know how my
Sure.
brother brought up the Bank of International Settlements,
Yeah,
yes,
yeah,
and the IMF. Well, what's interesting is, so what we do is we analyze all the data subjectively, objectively, no biases. And we really dig deep into the companies, the financial institutions. We really read the documents and the paperwork, and it consumes a lot of our time. But we always happen to find key elements that actually are so important and are literally in plain sight. But you really got to go through it.
yeah,
And
right,
so, for example, the World Bank Group in Washington, D.C.,
right,
their parent organization is the United Nations. So
right.
the World Bank Group, they actually published a document in September, I think it was 2021. And we went through the whole document. It was close to like over 90 pages or something. And we found a section labeled stable coins. And we went through that section, and we actually have the original PDF here. And in the stablecoin section, the World Bank specifically talks in great detail of the utility and use case of XRP, XRP and XLM, those two ones,
Right,
for moving value. So
right.
we're not talking about store of value, moving value, because that's one of the biggest issues in the world. It's moving value. Google, they solved it for moving information.
Right.
But supposedly, and even on the Bank of International Settlements on their website, if you go to the companies building out the financial infrastructure of the future section,
Yep.
Ripple is on there.
Right.
So it's almost like they're conducting all they're putting all these pieces to the puzzle together really quietly in the background. And it's just very interesting because
I agree with that. And you can see that my pushback on that would be that, XRP and Ripple are not Bitcoin in terms of their design, their distribution, the proof of work.
Agreed.
They're both institutional bank solutions for moving and transferring funds around, which, I think in terms of, store of value makes them, very deficient when compared to Bitcoin. But it does not surprise me at all that the banks would want to create their own proprietary system to solve this problem. I mean, this is why Jamie Dimon is not a fan of Bitcoin. I mean, Bitcoin is not going to do good things for JP Morgan and their business model. Right?
Sure. Yeah. About Bitcoin, Lawrence. So this is my counter argument on Bitcoin, and I just want to get your thoughts on it because I try to poke holes even in my own logic.
Sure.
Just so I can make the best judgment and decisions. So we know for a fact that every nation in the world is developing a central bank digital currency or already has one.
True.
All the data is there to support that.
I agree.
So if we can agree that, and we already know central banks, the big mafia families, the one pulling the strings, they want to always have control, especially when it comes to the monetary system. Anything that really is a threat to them, they'll take you out some way or another. They did that with Gaddafi because he was working on the African dinar gold backed currency.
That's
the
right.
list goes on, So right now we're talking about how Bitcoin is a threat to the system.
Yeah.
So if we know they're working on a CBDC already so that they could stay in power and control the system as the monetary shift takes place, the only thing is what concerns me about Bitcoin is the mission I resonate with, financial sovereignty and freedom. But
Right.
if they have such control, and this is a digital asset, Bitcoin, I feel like it's not in their best interests to let a competitor, Bitcoin, flourish in the future. I feel like they will
I
do
completely,
everything in their power to
I
some way.
completely agree. And we were all very concerned about that occurring, and that, frankly, that was one of the big things, in my opinion, and Saylor just came up with this too, that it was holding it back. I mean, the notion that, oh, that's a very nice and interesting technology. It's a good store of value, thing, but the government's going to kill it. But then the ETFs got approved. And so it's kind of like, that to me, that provided a lot of regulatory clarity. And, somebody, and to be honest with you, I was a little surprised that the ETFs got approved, because I was kind of like you, why would they let this stuff go through? My sense is, though, that what happened is BlackRock has a lot of money, a lot of political clout, and they could, they're Wall Streeters, and they said, hey, we can make money doing this, so let's do it. And they were able to use their political clout to get it approved. But to go back to where you are, I mean, and there are people who think that, the government plays nice, and therefore, because they've approved the ETFs, everything will be fine from now until forever. I tend to be more where you are, which is to say, I don't think they realize what they've done and the Pandora's box that they've opened. And if this thing really gets going and, shoots up to $1 million a coin, and which would kind of start to indicate that their fiat system is, quote unquote, failing, they might decide that they regretted having done this, and they might change the rules. And, because I've seen them do this, they changed the short selling rules in September of 2008. They changed the rules on the Hunt brothers. I mean, there's nothing that a government won't do to protect itself and save itself. And, the strength of the currency is what gives them their power. And so if their currency really starts to fail in Bitcoin terms, they could do a 6102, which was Roosevelt confiscating gold, or they could
1933.
They could do a 10 years in jail, or they could say, well, this Bitcoin stuff is messing up our monetary system. We need to tax it at 75%. I mean, I think all of those things are possibles. I mean, if we're up to Elizabeth Warren, she wouldn't allow you to self-custody it, right? She wants to make it illegal just to hold it outside of the system. I mean,
she's a very good puppet.
Yeah, right, exactly.
Yeah.
And by the way, I mean, that's the other thing. I think the other part of the reason why I think that the ETFs got approved is, well, this thing's happening, and it's going to happen either no matter what we're going to do, it's going to happen. Well, let's at least get it inside the system. If we let the ETFs, because they know that it's pretty easy using Bitcoin to be, to avoid taxes, right? Nobody knows where you have it. You can move it around quickly, you can go anywhere in the world with it, so on and so forth. And so I think that they thought to themselves, all right, well, let's make ETFs available, and then Schwab and Fidelity and all these other big, not Vanguard because they didn't do it, but all these other big brokerage firms will say, okay, buy the ETF, and they'll know who owns what. So if they want to confiscate it, they could get it. And if you sell it, make a profit, they're sure to get their taxes and all of the above, right?
Yeah. Do you think, sorry, go.
No, that's it. That was my point.
I'm sorry. I would like to make a point, Vandell, real quick, please. Give me a second.
Sure.
So you made some very valid points, Lawrence, and I totally agree with you on a lot of what you said. The thing is, when I look at Bitcoin, I look at it from a different perspective, and just playing devil's advocate a little bit.
Sure.
I like to ask how you reconcile, for instance, Bitcoin's perception as a store of value, and because of the thing is, it has a lot of deep ties to the stablecoin market, particularly its Tether, USDT. Right. And for those who really understand Tether, and you have to understand the stability behind it, there are a lot of deep concerns about Tether's lack of transparency, potential market manipulation. It's also had this discrepancy between Wall Street's promotion of Bitcoin and the bank's actions as well. The thing is about Tether, they've managed to avoid 8 financial audits, and I think their association raises a lot of concerns, through
I don't disagree with you. I mean,
artificial inflation of Bitcoin's price.
Yeah, of the number of coins. I don't disagree with you. I mean, Tether is just, to me, it's just another layer sitting on top of Bitcoin. I mean, if you own a stable coin with Tether, you don't really own a Bitcoin. You just own, a piece, a US dollar thing denominated whatever the price of Bitcoin is at any point in time, and you can transact with it. It's just another payment rail. It's different than the real thing. But I don't disagree with you. I mean, there are a lot of things about Tether that are very fishy, in terms of it not being audited, being overseas. What have they really got the reserves they say they have, et cetera. It's interesting. There's another one up in Boston called Circle, which is kind of the number 2 stablecoin USDT. And that one's much more kind of compliant with all the rules. And what we've been told by one of our portfolio companies called Custodia, is that a stablecoin bill, and by the way, this one up in Boston called Circle, excuse me, has BlackRock as a big investor in it. Surprise, surprise, surprise. And
Right.
a stablecoin legislation is in the process of making its way through Congress. And the way that the people at Custodia label this legislation, they say this is the Circle fucks, Circle fucks Tether legislation. And basically Tether is going to have to either play by the rules, or it's going to be illegal to use it in the United States. So yeah, this is all early days, Wild West. There aren't the rules and the regulatory regimes aren't entirely clear. And, there's messiness, and there's misbehavior. I mean,
Yeah.
Sam Bankman-Fried wasn't the last crook in crypto. I mean, there are others that, I mean, I honestly look at the Binance tokens, and, CZ did some kind of a deal with them to, do a small amount of jail time and step down. But, I look at those Binance tokens, I look at Binance, I think to myself, that's not that far removed from FTX. It's a very similar kind of situation. So, yeah, I mean, you're right. There are pieces of this whole thing that are fishy, and Tether is one of them for sure. But I again, I don't think
There's one last thing.
People think that if Tether fails, Bitcoin fails. I don't think that. I don't think that. I think Tether.
No, it probably drops significantly, but it probably won't.
I think there'd be an adjustment period, and Bitcoin will pick up the pieces and keep right on going. Do you know what I mean?
The thing is, I think for people to understand is that Tether is playing the role of a bad bank for probably Bitcoin and even Ethereum. I've done too much digging on all this stuff. And there's another thing I would like to add, Vandell, just a little flavor, is that there's a lot of deep connections between the banking institutions that are also objectively attacking Bitcoin, but still have the entanglement with the SEC.
Yeah.
So I find there to be a lot of clout between that, and it's hard to discern what's really the narrative because they're doing something else. It's misdirection. Look here, don't look over there. And I'm sure you can see it the way we do. It's just insane. I can't believe it. So
yeah, well, look, Gensler really effed this whole thing up, and they should have caught FTX earlier. There were a lot of us in the Bitcoin space saying he was a fraud, and there've been all these. I mean, there's still
a laundering money operation.
Yeah, there's still a lot of really shady things in some of these crypto things, and it amazes me how some of them kind of persist. I mean, I haven't looked recently, but that Dogecoin, which was started as a joke, that thing, and Elon
still is a joke. It
still is kind of a joke, but it's. That thing has a multi-billion-dollar market cap, and I'm just like, how go figure, Well, but people, I mean, look, people go to Las Vegas, and it's not rational. The house is going to win, but that doesn't prevent people from going there and gambling
or making money either.
Well, that's right. Some of them do. Yeah. Some of them do. I mean, and so to me, I look at a lot of the crypto world, and I think to myself, okay, I mean, that's kind of a Vegas-like activity, and it's not illegal, but it's not, to me, it's not investing in the way that I consider investing to be.
Well, about the BlackRock ETF, spot Bitcoin ETF. In my head, when that was first happening, we were thinking that this defeats the whole purpose of financial sovereignty and this whole monetary concept of freedom and to be out the system, because now it's given to the system. And in my eyes, if I was one of their, jackals or one of their guys coming from a banking background, which I have, I would say, let's drive up and stir up all this attention, get CNN to have the discussion about it. Let's get all this money pouring in, and let's do an ETF so that we could gradually
Control it.
gain more control of it. And
Yeah.
when you have control over it, that will not change what direction the politicians want to put regulations in. I mean, if they want, they can ban the on and off ramps.
Yep.
They could do a artificially orchestrated cyber attack,
Yep.
and it could all be planned out like every crisis for the most part.
So they could do a
And,
pump and dump. I mean, they could, yeah, they could buy it like crazy and then announce some negative stuff and sell,
like
dump
George
it.
Soros.
Yeah, and dump
With the
everything
copper.
they bought. Right, and watch it go down 60%. Yeah, no, I've thought of all those possibilities, and it's not,
Well,
you know, to my way of seeing it, those are not low probability events. There's a reasonable probability. I mean, you know, if you think about it, we're playing for all the marbles here. You know, the US dollar and the monetary system, and the fact that the government can print it, that's what gives them their power. And if that were not true, if the dollar did not spend, you know, and people were transacting in Bitcoin, and all, you know, the only thing that people would take for transactions is Bitcoin, the government would have a serious problem, right? And we're a long ways away from what I just described, but we're trending in that direction. You know, I mean, and you know, and we got a lot more trend, in my opinion. I mean, you know, there's 700 trillion of financial assets. Bitcoin's what, 1.3 trillion today. I mean, we're really, you know, that's a very, I mean, was that 40 basis points? It's a very small percentage, you know, and I think over time, more and more people are going to come to the conclusion that, you know, those financial assets denominated in dollars are losing value, particularly bonds.
Oh,
You know,
yeah.
Oh, yeah.
I mean, if we look at this whole situation, I think inflation's coming back. You see gas prices going up again. You know, I think that the sucker at the table is the bond market, right?
100%. Yeah.
Yeah. And, you know, maybe there's $100 trillion in bonds. Well, even if only 10 trillion of those, you know, come in our direction, you know, that's a big number compared to a $1.3 trillion market cap for Bitcoin. And by the way, not all of those coins are for sale. And it's really not even 1.3, because those who were around early on tell me, and I kind of believe them, that probably 10 or 20% of the coins have been lost. You know, back when they were pennies each, there was a lot of carelessness and people didn't realize it would have value. And there are a lot of people who got coins and lost the keys to them, and they're just sitting there. So they're not part of the supply. So yeah, it's, you know, it's fun times. I mean, there's a lot of stuff going on.
About interest rates,
yeah,
as they lower interest rates, people that own bonds are going to try to get out of bonds and jump into something like crypto.
well, that's exactly right. I mean, if they start lowering rates, who's going to want to own bonds when inflation picks up again, which I think it inevitably will.
Yep.
And yeah, so
Do you
go ahead.
Sorry, Lawrence, do you see so Versan and I, we have a handful of digital assets that we believe, and they
Right.
actually do, based on the data, have very high use case and real world utility for
Sure.
the infrastructure of the new financial system, whether it's tokenization of, you know, monetary value, or tokenization of you know, trade finance, or that whole idea. So
Sure.
we own a few of them. And in your opinion, or what do you hold besides Bitcoin? Are you an advocate of any other
Really not.
undervalued?
I'm not going to sit here and say that they're all junk, because I just don't know enough about each one.
Sure.
But to me, the reason I'm in this asset at all is for the store of value piece, not, you know, not the future transactions, not Web3, not the smart contracts, not all things which, you know, have value and are important and will be part of the new financial landscape. But that's not really what I'm betting on, investing in, trying to figure out. I'm making a bet on almost what I consider to be almost certain monetary debasement. And therefore I want to hold things that I know can't be debased, because there's 21 million of these things and they're algorithmically declining every 4 years. Then issuance gets cut in half. And so there ain't ever going to be any more Bitcoin. It is what it is. And that in and of itself is really, really unique. I mean, we've never really seen anything like that in the world before. every other commodity, I mean, if the price of gold goes up 10x, I can guarantee you we're going to mine a lot more gold. Price of oil goes up, we drill everywhere, we find more oil. The price of food goes up, we grow more food. I mean, every commodity in general responds to price. Higher prices will people will go to work and say, oh yeah, profit, I'm going to go make some more of that. This is the only asset that I can see or think of, and maybe there's others that I'm not aware of, but this is the only asset I can think of. The price goes, it doesn't matter. The price does not affect the supply of this commodity. Think about that. That's kind of hard to get your head around.
Mhm.
But I think as a result of that characteristic, that's why I think there's so much asymmetry. That's why, and by the way, the world has never seen one of these before. I mean, this is,
Yeah.
it's like we invent, I mean, it's like the printing press. I mean, it's just whatever it is. It's like the automobile. It's just like, it's something, we discovered something new, which is,
Yeah,
yeah,
you're right.
legitimate digital scarcity. And we're trying to figure out what that means. But,
Since
go ahead.
Yeah, since the year 2000, the early 90s, that was the last time where we had innovations that disrupted the world on a large scale.
Right.
Yeah, the dot-com era, that boom.
Well, we still got innovation. I mean, there's still, things just keep bumping along. I mean, look at how we're talking to each other here. I mean, if I remember 10, 15 years ago where you think about doing a video call. I mean, you had to buy a bunch of expensive equipment and go into a conference room.
Right.
Here the three of us are having a very high quality, real-time video call. And what do I pay Zoom? $150 a year or something? I mean, it's peanuts.
Yeah.
Yeah. So it's the digital age. I mean, things just keep getting better and better, and because of the technological developments, and obviously, I'm sure you guys are looking at it, focused on everything else. I mean, imagine some of the benefits that AI will bring us over time. I mean, it's just,
Oh yeah.
right. I mean, that's the next one, and it's coming. You can see it coming.
Well, there's pros and cons to all this stuff.
Well, that's
AI,
right. There are costs,
of course.
yeah.
Right.
What do you
I
think
think
about?
real quick, Vandell, besides AI wiping out most of the jobs in the next 2 years, that's something that people really need to be concerned about. Use AI to adopt it to better your future. Real quick, Lawrence, I did want to go back to sound money.
Sure.
And I've been following some new developments here in the States, and there are some states like Louisiana, Utah, Texas, and I believe there are 2 more. They have recently passed legislation to recognize gold and silver as legal tender. Are you familiar with that?
I'm very familiar with that. I think it's a wonderful thing. Yeah.
I think it is too. But do you think this move is towards a gold-backed system? This is slowly happening everywhere. Do you think this is a broader narrative that's influenced perhaps by the global trends, for instance, like what the BRICS nations are doing?
I do.
Do you think there's some sort of relationship there?
I do. I mean, I think the states are smart, and they realize that, the federal government's out of control and the currency is getting debased, and they're saying to themselves, how can we help our citizens protect themselves? And, I mean, the great thing about making gold and silver legal tender is that then if they go up in price, you don't pay a capital gains tax, right? I mean, now, sadly, at a federal, these are state levels. But at a federal level, there's no capital gains tax. And so, I mean, well, there would be if it were federal, but at the state level, there's no capital gains tax. So yeah, I mean, look, the monetary debasement is, in my opinion, at the core of this entire fourth turning change thing we're living through right now. And how the monetary debasement issue gets addressed is up for debate. And the established 5,000-year history of gold would suggest that that's a way that a lot of people are going to go. And competing with that will be the less established, but very, in tune with our age in terms of being digital and easy to use and store and everything else. Properties of Bitcoin, make it a competitor to gold. And so, it's difficult to know how they're both going to play off of one another in the future. And that's why I own them both, because, I don't know. I mean, I think in a longer time frame, Bitcoin will win because we live in a digital world. But I think in a shorter time frame, when governments come to change to try and reset the broken system, which I think it'll break badly at some point, and they'll have to reset it. They're very likely to go to gold because they know.
They're setting the stage for it already.
They're saying, right, and that's why they're all buying it. And I mean, they're very in their mind, they're going to say, we're not ready for Bitcoin yet. We can't, so we're going to back, there's going to be 10 old dollars equals one new dollar. One new dollar is going to convert into gold at $40,000 an ounce. And we're not going to print too much money because, we know we'd have to deliver gold against what we print. And so that's going to be a world that looks a lot different than the world that we're living in right now. But one thing I want to give you guys a warning. I've got kind of another 5-minute window or a little less. I'm scheduled for another call that I don't want to
Perfect.
keep them waiting on. But if there are any kind of final questions.
Final question is, how big do you think this bull run is going to be this cycle? Because we have our own feelings about it.
You mean on Bitcoin in particular? Yeah.
Well, we can talk about that, but yeah, in
Well, let's talk both.
crypto space.
Yeah. Well, so I mean, as I think I told you, I'm not very expert on anything other than Bitcoin and crypto land. But look, I think that as the Fed comes into the rescue with the next thing that breaks, and will probably be the banks, that I fully expect within an 18-month window to see gold over 3,000, maybe approaching 4, which is much higher than it is now. It's it was at 2,000, it's 2,100. It appears to be breaking out right now, actually, as we speak.
That's manipulated.
Well, of course it is, yeah. And then I personally think that on this particular Bitcoin run, and this is very hard to judge, but I personally think that, I mean, 100,000, that's falling off a log. We're almost there. 2, 3, 4, 500. I mean, I've seen projections of 1 million. I think that would be kind of extraordinary. It's not likely to go that far that fast, but I could be wrong on both sides. I mean, it could stop at 150. I think that sounds kind of low to me. I think the last run was truncated by the Chinese miners being thrown out of business and by FTX. And so the last run 69 wasn't as high as it should have gone last time. So maybe this time it goes a tad higher than it should go. I don't know. That's just a guess. But I wholly expect that we'll be at 100 or 150. I mean, probably 100 by the end of this year, and I'd say maybe 200 by the end of next year. And it could surprise to the upside. But it's very clear to me we're in that cycle right now. And in particular, it's because the halving is coming, as you guys know, and supply is going to be brought down. And if you go back and you look at the history of Bitcoin since its inception, when the halving happens, you tend to get a very, very significant price move. I mean,
and they have to prop up the markets for the presidential cycle as well.
Well, that's right, and we exactly, and we're gonna get a lot of macro help
and debt restructuring too. Exactly. That's coming also
because of all the other stuff that's broken. But yeah, so right now I'm very comfortable in this trade. All the other crypto stuff you guys are in, I'm assuming it benefits as well. I know Ethereum is, Bitcoin's gone up a lot. I know Ethereum is tracked. So,
but diversification is key.
Exactly. And as I say, that's not my specialty. I've kind of drilled down on this one thing, but guys, I got to run.
Thank you so much.
Really nice talking to you. I'm happy to come back anytime. When you get this done, give me links and I'll retweet it. And
we'll do.
Thank you.
If there's other stuff you'd like to discuss, happy to do it.
Thank you, Lawrence.
Such a pleasure, man. Thank you so much, Lawrence.
Thank you.
Talk to you soon. Bye.
Okay, we'll see you. Bye-bye.